Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, August the 10th, 2017, and this is the Daily Report for Gold and Silver. Strong upside moves in the precious metals today as a war of word continues to escalate and tensions continue to escalate between the United States and North Korea. Gold up almost $13 on the day, $12.9210. That is our current print. It is traded to a high of $12.93, so we're only ticks off of the high, and the low today, $12.80. Of course, we have a long position in gold currently, and we will go over that trade in detail, as well as talking about where we're looking to move our stop placement. Net change in gold today, roughly 1%. Silver tracking a little bit stronger than that, closing up about 1.5%, 25 cents in terms of a net gain at $17.11. So traders, we have another day of strongly higher pricing in gold as it sits. We're looking at gold at $12.9160, up about $12.30. We have one of our shorter term resistance lines drawn in. And of course, this particular resistance line is drawn in from the highs that came in at approximately 1360 in that area, and this was the high for a year. When we extend that to this most recent high that came in just shy of 1300, and then extend that, and that's of course what is creating our compression triangle, we can see that earlier, beginning in about June, it hit this top and then began to track lower. It actually broke below any kind of support, going to these lows at 1203, which of course turned out to be in essence a double bottom in the market. But we now have a scenario in which we have definitively broken above this particular resistance line, and our target right now is to see gold break above $1,300 per ounce. And traders, another way to look at the current scenario, if you recall from yesterday's show, we spoke about the fact that we had identified a variation off of a three-river morning star. I'm calling it a variation because A, there are double stars rather than a single star, and B, it did not occur after a defined downtrend in the market, which is one of the criteria for this particular pattern. Nonetheless, today's candle absolutely confirms this variation, and we are looking for, as I said, significantly higher pricing. Let's talk about stops in our current level. Given that this market over the last 3 days has traded from a low of 1257 up to a high today of 93, we've got a pretty dynamic range in the market already. But one thing stands out to me, and that's the fact that this former level of resistance, which comes in roughly at 1280, is based upon these recent tops in which the market failed to take out that particular price point. And based on that, I would look for this level now, meaning 1280, to become a level of support rather than resistance. The next real target has got to be just below 1300. That's the former high of the year. But I believe that if we do get into the level of 1300, we will no longer see a failure. I would expect gold prices to take out 1300, and I'm currently eyeing approximately 1317. Now, traders, my rationale for that price target of 1317 is as follows. We're looking at a weekly chart. This has that same upper level resistance. We can clearly see that we have broken above that. And if the market continues and breaks above 1300, I think that the first level it could find some sort of resistance might be based on these series of bottoms, loose bottoms right in this area, which correlate to a price point of about 1320. Above that, of course, is the high that was achieved in 2016 back in July and August when the market went to 1360. And for that reason, I believe that would be the upper level target that we would be shooting for, which would be around 1360. We will be looking to move our stops up, and the area that I'm looking at is going to be just below $1,280 per ounce on an effective stop. My recommendation is to obviously maintain your current long position and look to move your stops up within the next day or so. And traders, we did have a pretty dramatic sell-off today in U.S. equities. The NASDAQ composite losing 136 points. That's a big drop, a 2% drop in the NASDAQ. We could see further erosion, not only in the NASDAQ, but in the other equity indexes, such as the Dow Jones Industrial Average. We have just put up a weekly chart. Clear break below 22,000 today, a loss of about 200 points, 21,844. Traders, absolutely no doubt, there is a heightened level of tension in the United States, I would say, in fact, globally, with the conflict that currently exists and the war of words that exists between the United States and North Korea. We are long gold. We will maintain our current position. And as I said, we will look to raise our stops over the next 24 hours. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.